A question that traders and investors often find themselves asking is whether or not they should continue to hold onto a share or if they should sell it. Stick around to see some ways you can determine exactly what you should do. How's it going, guys? Ryan here again with another episode of Stock Market Basics. But before we begin, please remember to give me a like. It always helps me out a lot. And if you want to see more content, please subscribe to the channel. I've got lots of stuff, at least 3 videos coming out a week at the moment, and I'm really enjoying it. I hope you guys are too. So let's get into it, guys. This video is all about, do I sell or do I keep holding onto my shares? And it really comes down to what you're doing. Are you trading? Are you investing? What are the current factors at play? But often it's quite a dilemma, in particular if you think something's going to keep increasing in value, or you find other opportunities on the market where you want to pull your money out, but you still got that little bit of uncertainty at play. Today we're really going to delve into some of the different scenarios that you could find yourself in and what questions you should ask yourselves if you're in each of these to determine whether or not you should sell or hold the stock. So there are 3 positions that you could potentially be in. The first of which is you have bought a stock and you're currently in profit. The second is you're holding on to the stock and it hasn't really changed in value at all. And the third is you're holding a stock but you're losing money on it. Each of these 3 scenarios really have to take into account different factors that can affect them and can affect your decision-making skills, because you don't want to become emotionally blinded and attached to the shares that you're investing or trading, because you want to be in a position where you can maximize your profits and minimize your losses. So let's delve into the first scenario. That scenario is you're currently making a profit on a stock. Now, this could be a small profit, maybe 5%, 10%, or it could be a large profit of 50%, 100%, 200%. You never know. Anything's possible. And there's a few questions you really need to ask yourself when you're deciding whether or not you should exit the stock or whether you should keep holding onto it. The first question is, how much has the stock increased on a percentage basis in the short term? If the stock's run really hard and the price has tripled or quadrupled, it's likely to see pullback, and you don't want to be caught in a scenario where there's been consistent profits over a period of a few days and it's shot up in price incredibly high, and then all of a sudden everyone dumps their shares and you lose out on the profit that you currently made, or you potentially go into a negative value. If the stock has increased significantly in the short term, then likely you want to sell, because there will be that pullback. Whereas if it's only increased a little bit, maybe 5%, 10%, and it's going sort of over a longer period of time, then likely you'll see consistent growth if that's what the trend currently is. This leads on to the next question, and that is, can you see the stock to continue increasing in value over the short to long term? And you really want to be looking at the fundamental factors at play, such as potential news coming out in the pipeline, profits, growth, that sort of stuff, as well as the technical indicators. So you want to be looking at the trend. You want to see, is the RSI clearly overbought and it's going to pull back, or is it still quite low or in the moderate range? Those sorts of things you really need to look into, because they'll help you determine whether or not you're going to expect to see an increase or a decrease in the value of the stock. Now, when you've actually made a profit, it's often you get this great feeling of euphoria, particularly if it's a large percentage gain like 50 or 100%. And the question you need to ask yourself is, are you willing to lose that money? Are you willing to risk holding on to that share, or be a bit more greedy and potentially lose your money? Because even if everything's going really well for the share and you can see that it's continuing to go really well, anything can happen. Everything can happen in the stock market. There's absolutely no reason why the share won't one day decrease 50% in value. It happens, or an unexpected announcement occurs, or a large shareholder dumps their shares taking profits. You need to consider whether or not you're willing to take that risk in losing that profit that you've made. And if you're not, you should definitely sell. And at the end of the day, you always need to remember, if you consistently take profits, especially the large ones, then you're not really going to lose out too much. Then the final question you want to ask yourself is, are you trading or are you investing? So if you're trading, what you're looking to do is secure consistent profits. So more likely than not, if you're in a profit and it's a decent one, it's hit your target, you want to take that. You want to secure that profit or put stop losses in place so that it's a trailing one where the price increase and the stop loss also increase. Or you want to look at it from an investing point of view. So let's say you're going long term on a stock for a few years and you can see that it's shot up in price, but you're not in it for that sort of sense. You want to see it grow in the long term, potentially get to the point of dividends. In that case, you might not want to sell and the price action might not actually affect your decisions whatsoever. Now, the second scenario is a bit more interesting. It is the stock has not really changed in value. It hasn't gone up, hasn't gone down. It's stagnant. There's not much going on. It's not too exciting at all. And these are often the hardest times to determine whether or not you should sell or you should continue to hold a share, because there's a few different factors at play and you need to consider the other stocks currently out there in the market. So the first thing you want to ask yourself is this stock likely to increase in value soon? And more importantly, why do you think that? Why do you think the stock's going to increase in value soon? Or why do you think that it's not going to? And that will really dictate your decision. So if you know there's news in the pipeline, for instance, so there's some big announcement or positive drill results that you're expecting, it's likely, yeah, it might be a bit stagnant, but hopefully if the results are positive that came out, then the price would increase in value. So as a result, you're holding on to it until that point. Alternatively, you might be trading the share and not really much is happening. You don't know too much about the fundamentals, and from a technical perspective, there's not many people buying, there's not many people selling the share. Then likely you want to exit. There's other things you could be doing with your money. And this really leads into the second question you want to ask yourself, and that is, are there any other opportunities on the market which are better than the one you're currently in? Because at the end of the day, if your money's sitting there doing nothing, then what's the point? You could be making money elsewhere in something that you know is potentially a sure thing, or you can see consistent growth in another share rather than it just sitting there doing nothing, because at the end of the day, it's wasting your time. You could be making money and you could be looking for better opportunities on the market. Now, in saying that, you could be in a bearish market at this point, for all you know, and your stock's stagnant because it's actually a relatively stable blue chip stock. So the fact that in the current economic climate that it isn't decreasing in value means that it's actually quite stable. It's quite a strong stock, and then when you start to see recovery occurring, you might then start to see an increase in the value. Whereas with the other stocks, maybe the speculative type stocks, they're all decreasing in value, so there's not many clear opportunities out there for you to reinvest your money in, so it's worth just holding on to something secure in the meantime. Now, that leads us on to the final scenario you could be in, and that is you're making a loss on a stock, and more than likely or not, you're panicking and you don't know whether you should get out now to avoid further losses or if you should hold it in case the stock's going to bounce back in price and potentially you might break even or make a profit. The first question to ask yourself is, why is the stock dropping in value? Is it because the stock is a dud? Is there not too much going on in the marketplace? Is it the macroeconomic factors that are affecting this stock? So let's say it's a gold miner, for instance, and the gold price is dropping. Is that why the stock's losing value? It can often be quite difficult to pinpoint why the stock is decreasing in value, because often you'll see stocks which have awesome announcements come out and then all of a sudden the price just plummets. And that's normally from traders taking their profits and that sort of thing. And you might be thinking to yourself, oh, is it going to bounce back in value? Is the reason that it's falling because people are taking profits and I need to be looking a bit more long term? Or is there a bad announcement that's come out and as a result the stock's just plummeting in value because testing has gone poorly, the drill results from the mine have come out and they're very bad grades or something like that? As a result, in that situation, you might actually want to exit the stock instead. Now, if you're taking more of a trading angle, what you'd probably be using is more of a stop loss type system. So what is your stop loss? Has the value of the stock hit that point? In which case, if it has, you should exit. You need to stick to your strategy, you need to minimize your losses and your potential further losses to protect your own capital. If it hasn't yet hit that point and you think there's a potential that it can keep increasing in value, then likely you should hold on to it, because you've still got that measure in place to mitigate you losing a chunk of your capital, and it's still there as a safety net effectively in the situation where things do go south, but you still want to take that chance. You still think the stock could increase in value, and as a result you want to keep holding onto it. Generally, the way I look at the value of a stock is, if I'm losing money on it, it's really coming down to my strategy on that. So if I'm trading it, if it's losing money, then I'll exit. I'll just cut my losses quickly, because at the end of the day, when I'm trading, I want to be making consistent profits and minimizing the losses that I have. If I'm investing, on the other hand, I might be in it for the long term. So often you'll see, and you can go to a lot of big companies, you'll see that their stock chart goes up and down in price consistently, especially when they're in the stages of building their company up. And as a result, I might not be focused on the short-term fluctuations in price. I'm looking to a 1 year, a 5 year, a 10-year basis for that outcome. So the current stock price and me losing value might not really affect me right now. That wraps it up for today, guys. I really hope you enjoyed the video. If you did, please remember to leave a like. It helps me out so much. And for more content, always remember to subscribe. If you have any questions, please leave a comment below and I'll make sure I answer them. And with that, I hope you guys have a fantastic day. See you next time.